Hello guys, welcome to the Trading Parrot. Next Friday, March 7th, we have the Crypto Summit coming in, and on the same day we have unemployment rates and Powell's speech. Retail seems to be doing kind of a comeback at the moment thanks to yesterday's tweet from Trump talking about the strategic reserve. We're gonna look at all the technicals today and see how we are approaching the week, look at levels that we need to hold to continue with the upside, or if this could just be another rug pull. I'm sure it's gonna be an interesting week again. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. 2 days ago, guys, I managed finally to get 1,000 likes. Indeed, we got 1,200, I think, over that number, and almost 10,000 views. I'm gonna take some merit for that, but at the same time, I'm gonna show you that Google Trends is currently pointing up. It seems to be that the tweet yesterday, whether it's manipulation, narcissism, or whatever theory that you may have, maybe it's just the Crypto Summit, and maybe you're right, guys, but it's doing the trick of attracting retail back into crypto. On the 1st of March, we closed the previous candle with 34, and now we are sitting at 38 in this in-progress candle, and it's got the potential to produce a breakout from this flag, anticipating maybe a strong upside, a comeback from retail, new liquidity, and all of that. In terms of events this week, we got a bunch of things coming up that I mentioned in yesterday's video. Apart from the PMI, I'm currently focusing on what's coming up on Friday. So I suspect that the previous days there will be some volatility, but I will expect Friday to have the most, and possibly today markets open. I'm very curious when general markets open what's going to happen with the CME gaps, which we're going to review just in a second. We got 3 CME gaps that I cover in this morning video. We can touch base again in this one too. There's 2 news that are attracting my attention at the moment. One is that by the end of the month, they are going to delist non-MICA compliant stablecoins in Europe. This includes USDT and DAI. It's important to note that even if this takes effect by the end of the month, deposits and withdrawals remain supported. So European users can still hold and deposit in this potential transition period. They're trying to push people to convert into USDC, and even this one called URI. Once exchanges comply to this, they're gonna get an MICA license to be able to continue operating. Here's the full list of all the coins that need to be delisted. This also includes the digital gold, PAX gold. Well, and of course, on Friday, Trump is hosting the Crypto Summit with key figures from crypto industry and the president's working group on digital assets in attendance. Things that we could expect from this is the SEC to continue to slow down with their continuous attack on crypto projects. We have seen part of that already, even including some meme coins that are now considered collectibles. The second effect of this meeting that I'm expecting is this increased volatility on coins that belong or are based in the US. And one thing to note is that in yesterday's tweets from Trump, he started mentioning coins that were from this list initially living outside Bitcoin and Ethereum. And I think that hints that on Friday there's going to be a strong focus on giving privilege to this list of coins, including XRP, Solana, Hedera, Stellar, Avalanche, Sui, Uniswap, Aptos, LTC, Ondo, and of course Trump coin. He had to post a follow-up tweet clarifying that BTC and Ethereum are also included as also valuable coins, which is funny that they are included as a second citizen class in this list of, oops, I forgot those ones. As usual, we look into liquidity and we have new candles pointing up, so that is positive. For example, on global M2, we have this very humble move up. Remember that what we want in this area is a retest, and that is all great, but the final goal is to take the highs in here. So we can be in any of these previous examples where we put a double bottom and then we started going up. Last week, we saw the Federal Reserve's balance sheet also pointing up. It still hasn't taken this high in there, so it's in a similar situation, going in the right direction, but still not putting a new higher high. I wanted to mention that the price has come back down in the previous range, but the open interest hasn't. And this is just one alpha out of many alphas that I always cover. But it's very interesting to see opposite behavior compared to the previous bull flag. If you can't really understand what I'm trying to say, is this is not necessarily something bullish. In the previous bull flag, the open interest took the first steps in a bullish direction, reclaiming before price, retesting before price, breaking out from the top before price. In here, we see price doing these things, but open interest not following up in the same direction. That by itself is bearish. It's not something that you can trade isolated. You have to put together with other signals. And if I was just able to see this thing by itself, I will take big caution. We are 10% up in March, and the hash rate today has taken a big move down. Remember that we were observing this area in here and saying, well, this could be the beginning of something. If hash rate starts pushing up in a breakout, we can be in a similar situation as in this buy in here, where the hash rate came back from where it came from and we got the buy signal. In here is pointing down, so I believe that is not a great thing to be seen in here, and it could delay that buy signal a little bit further. Okay, what really matters at the moment, the 4-hour time frame has crossed the whole range now to the top of the symmetrical triangle, which is pretty much what we've been doing all this range, expanding and expanding and expanding, making that triangle wider and wider. After reclaiming in here, we went to the top, we produced a global breakout on the 4-hour, we pinched the percentile, and now we have this line holding the breakout. In my opinion, in here, we should be expecting a breakdown. That is what the 4-hour says. And in the price action, that should look like a pullback. How low that pullback is gonna go, that's a different discussion. But after pitching PNR and all of this, remember that this is a global breakout, but from 62. So what's the upside of such a breakout? Maybe a little bit higher, getting into the next resistance. But eventually, this line in here has to be taken. And if you take this line, it's very easy to come back inside the triangle once again. Remember that this can come down like this. If you are new into RSI, most people are, and you break this below, and then the RSI goes back into that resistance at a higher point, that can still create new highs in the price. So what we are trying to see in here is what's going to happen with the momentum. Are we slowing down in here, or are we going to remain at the highs and continue with a rally into Friday? It is obvious to me that the tweet last night was Trump trying to get things to start moving to the upside. Just go and watch his video a few months ago where he was pretty much memorizing every single thing that he needs to say to get things bullish. And that was completely artificial, because when you hear him talking about crypto, he never heard about many of those things, and he did an amazing job at memorizing exactly what needed to be said to get crypto voters to vote for him. And at this point in time, when I say it's manipulation, I mean he doesn't give a crap about crypto. He just cares about what he needs to achieve. This is not a criticism, but that's the way politicians work in general, everywhere, in every country, not a single exception. So I take everything with a grain of salt, and I think that if this breaks in here, we could get a revenge rally, a buy the rumor, sell the news, that could expand into Friday. There is a bunch of things that we need to take in consideration for this analysis as well, because we have CME gaps below the price, and we have a daily time frame and a weekly time frame that is also gonna have a strong say in what's happening this week. This is not just about looking at the 4-hour. So from the 4-hour, the takeaway is pullback, high likely below this trend line. Let's move on to the next one. Daily time frame. Daily time frame did a miracle move from being below support from August 2023. Guys, that is over a year of support lost. We don't just reclaim it after testing it on Saturday at 31. But on Sunday, one tweet moves everything from being below that long-term support lost into the next resistance. So flipping things completely upside down. We haven't gone, of course, to the top of the range, producing a fifth wave of the RSI in this bull market, but we are being held right there at the 52. What matters in here on the daily is, in here we should be seeing, and I think we are already seeing a test of that daily at RSI 52. Bullish moves will look something like this and eventually a breakout. With retest, we could see a move into the top of the range, and that could be just as a result of the event in Friday. But of course, if general markets, which have the last word this week still, no matter how bullish is the event of Friday, if general markets start correcting, then this is not gonna survive in here. It's just gonna go where it came from. So I will keep an eye on this strong support at 42 RSI on the daily to call it the line in the sand. That is my pick. If we stay above that, we can still break out from the top there. If we start losing 42, you see what happened last time we lost 42. So I think that level still has something to say when it comes to what happens and how we get there this week. So at the moment, that resistance of 52, that global resistance, is right here at 94,800, give or take. Our support is 91k because that's still the bottom of the range. We just reclaim it. By reclaiming this on a daily basis, we are calling for a rally into 104.4 from the point of view of a trading range on the daily. But for that, we need to hold 91k. We really cannot afford to go down in here, close the CME gap at around 84 to 85 and stay there on a daily basis, because then that means that the rally to 104.4 to the top of the range is kind of doomed. Next level that is very important is the point of control at around 97k, which I hated to trade this area in here, so shallow, so low in volume and full of manipulation. We haven't got yet to 97k because in here at 94.8 there was a vacuum of liquidity pools. That's why this nasty trader took a 50x position right before Trump tweeted the announcement, and then he took profits almost at the same point where we were talking on Saturday. That was the target of the inverse head and shoulders. That inverse head and shoulders was spot and showcased on Saturday's video when we were still not forming it, and we were already talking about the target of 94.8, which we fulfilled by the dollar so far. So I think Friday, a rally into that area has good chances of continuing to the upside, but we need to defend the 91k. We have already tested that. We went to 91.3 today and it's getting bought up, and that is indicating that there might be higher chances for continuation. At the moment, the market is just moving slow because general markets are still not live. By the time this video goes live, probably they are already. On the Bitcoin index on TradingView, it's really annoying me, this candle in here, because the opening price should be 94.3, but it's showing it as if the opening price is 88.2. Therefore, it looks in green, but the current price is below the previous close, so there's something wrong with the coloring and with the shape. Even if you go to BTC on Binance, that is the way it should be looking. At the moment, we are above the bull market support band. Price is 93.3, so it's making it look like we reclaim it. Unfortunately, I have all my lines in here, so I'm gonna have to possibly redo this chart. This week to the downside on a weekly basis has been a very strong signal of reversal to the upside. You can see it in here once, 2 times and 3 times. Every single move to a new range to the upside came with one of these weeks. But again, ignore this green candle because something is off in the index on TradingView. As I mentioned in yesterday's Sunday Alpha video, we didn't close the bullish cross on the stochastic RSI on the weekly, but with with the price action that we are currently having, the K and the D line are at the same reading. Of course, if we go to other exchanges, you're gonna get different readings, different prices. Potentially in some of them, it's already showing it as a bull cross. But for this to actually cross, we need the price to go slightly higher. I suspect to 95K will do the trick. During last week, the weekly RSI was below this support. We left in here a bubble when we were all tense in the comments, everybody thinking that is the end of the world. Then I was very happy that we were slightly above 49 and 50, and thanks to Trump's tweet, we got a placebo medicine that pushed the momentum all the way back to 57. Far away from the support. We were even talking in the Sunday Alpha video that closing like that will be already great, closing at support and then getting a rally into higher prices. But now all of that is gonna have to be reanalyzed because we are in the middle of the range there. We are not at support, but we are not at resistance on the weekly either. The yearly chart is back into the green. It's in an indecision candle, very shallow, very small range yet. But for now, this particular minute is in the green. CPR chart, let's have a look at it. I showed it this morning, but I want to show you what's going on in here. We have a big green candle in here that crosses all the pivots on a daily basis. And today we have tested the pivots at 90, 91K, and we are bouncing off so far from that. It will be great if this month we test once the first resistance, which is 98.669 at the moment. That is the first green line in there. The model says that if we do that on April, we have the highest chances to do the same and again continue in an uptrend from here. On CME, it's kind of a mess at the moment. I think that we have filled the gaps between 92.7 and 93.6 on CME Premium, but we have created a God CME gap that spans from 85.460 to 91.545. That priced on Binance is 85.156 to 91.316. So I'm going to reduce the length of this one so we remember that it's gone. The one that is not gone is the one below. I think that there is still 800 gap left over below 78K, and it's kind of the last hope for people that couldn't manage to enter below it. I entered at 87, I couldn't manage to average there, and I took profits at 94.8 because that was my target. Now I'm assessing the situation, I'm looking at the CME gap, I'm looking for opportunities, and I'm not gonna chase the price as usual. On the monthly, we have a very critical situation. I will say it's a great opportunity to get us out of here, really. If you look at the previous candles where we were ranging in here, for example, at 27K, this green candle, which is a monthly candle, closed right below this resistance, and on the month after, it got us out of there with a big rally into 73.5. In this range in here, we have something quite similar as well. We have the resistance at 63K. We closed September there, and in October, we got us out there. So it really resembles kind of that situation where you break down with a red candle, you convince everybody that we are going way lower, then we get something that kind of retests the previous range, then we get stopped by the previous support, and then in the next monthly candle, we get out of there. It doesn't need to be in the next month. Sometimes we have done it in the same candle, and you can also argue that this move went only to 78K, not really to 73.5. This test in here was at 49.6, and the highs in here were at 48.9. So those were hundreds of dollars difference for a retest. This one, there's still a decent gap of around 5K. So not that close to call it a real kiss. Let's look at these signals. I'm going to talk about the SOPR and leverage squeeze. We got both news on those. Last week, we got 2 buy signals on Bitcoin and 2 buy signals on Ethereum. If you have access to these indicators, you can see how many times they have triggered on Bitcoin. Definitely works better on Bitcoin than on Ethereum. You can, of course, change settings to adjust it for Ethereum as well. It's not going to work on other coins, just on Bitcoin and Ethereum. because it requires the SOPR data that is currently listed just for these two assets across all crypto, unfortunately on TradingView. The signals seem to be at the moment valid ones. I mean, they trigger and we have an upside of 11%, so not always you get an upside over 100%. Sometimes it's just in a trading range and you get 25 or 11 in this case, and actually we don't know how far this could get higher. We just know that this is current resistance in this trading range and we need to get beyond 94.8 to continue with this new Trump pump. Leverage squeeze has a different opinion at the moment, and leverage squeeze is another indicator included in the VIP. Looking at the longs and shorts on BitFimex, the blue and the yellow signals have been really accurate this cycle. The red ones not so much, neither the green ones. But recently we have a signal here at 100k with a sell that gave 21%. At the moment we have kind of a hive here of signals overlapping. Both are short, the red ones that are not so high accuracy and the yellow one that trigger at 95k roughly, saying that there is too much leverage and too many longs in here. You can tell that the past time it triggers at around 102 and then at 107 more or less. If you average those two and you get an average of 104, that gives a downside of 25%. These ones were also accurate. They're not always by the dollar, but they tend to be important signals. For example, this one just triggered and there was sideways and maybe 4% downside only. But let's see what this one is going to perform in the next few days. If we see a drawdown to the 50 level maybe and we close the CME gap, then we will come back to this chart and say, well, that's good enough. With this move up, I care if I see big whales depositing in exchanges, and at the moment there is just mild deposits versus withdrawals, so we can skip this information. I'm interested to see if this week when it comes to ETFs there is a reversal, maybe the opposite kind of trading style where we can see 200s, 500s and thousands of inflows instead of outflows. Hopefully we can reverse the drawdown of -11, -12%, which was the largest drawdown so far when it comes to total cumulative flows. We're still in fear, so you are more than welcome to slap yourself. It's not extreme fear, so maybe do it with a little bit of extra love today. Let's be clear, looking for longs now it's a little bit more risky than it was when we were looking for longs in extreme fear. The risk reward at that point is the highest. We are still in warning buy season from Cerberus, meaning that a lot of cash has gone still into USDT and is waiting on the sidelines. And whenever there's a move up in the price, all I care is if the long-term holders have done anything. Have they sold here? Are they smelling something fishy? No, they continue to go sideways. Liquidation levels. At the moment we have quite a large one here at 97k. This could be the target or the initial target of this bull flag that is currently on the 15 minutes pointing up. On the lower end, we have liquidation levels at 78. Let's see if I zoom out a little bit while leaving out the 100k, because that is too large of a liquidation levels and it's gonna spoil my chart. As you can see, I can no longer see anything because the normalization of trading different assigns red to the highest and then it starts reducing the rest. So let's put out 100k of the screen and let's see on the lower end what comes out. So of course, we have everything that didn't get taken from 75,500 into 73. That is the area that we should be going if we see a strong rejection from where we are. If this was just a pump and dump, we are looking for those levels being the largest in liquidation pools. Notice that we can have a correction into the CME gap, fill it at 85k, put a higher low and then resume to the upside. There's nothing saying, there's no rule saying that you have to 100% right now go and fill the 77 left over. I am not saying that. CME gaps have high likelihood of getting filled, but the timing doesn't necessarily need to be now. So watch out. those guys that are counting on this 100%, because that is not what I'm doing. I have ordered there. If we go there, happy days. If we don't go there, I need to be looking for a new long. And I'm not gonna wait for 77 because the risk in here is that we get a rally into Friday and I cannot manage to get any of that. Liquidations to the upside past 30 days, we got in here stuff that we didn't take. The 97, which I already saw on Trading Different, and then the 100K. You can see that we kind of repeat the same thing now for the shorts. A few days ago, we were talking over 1 billion liquidations of longs. Now we are seeing over 1 billion of liquidations, mostly of shorts. I was expecting to see over 70%, but this is just 58. And let's do the surgery of the order book. We are out of the extreme fear. Longs have pulled back a lot. That is by itself an alpha that is not the most bullish one. We are not next to the blue line that has come with strong pullbacks, but we are kind of getting closer. I will say we are closer to the blue line that we are from this top of 75 where everybody was long. You can tell that everybody was long when we were falling. 1, 2, and 3. Everybody being long on the way down tends to be a local bottom or very close to a local bottom. When this overlaps with low funding rates, that also helps the price to move up. In here at 87, I enter initially and we move up to 89.5. We failed, and then we repeat the same thing around here with another negative funding rate. These bars that you can see in there was too many longs at very high leverage. Then after we bottom, we cleared them all out, and then we started the party of too many shorts with very high leverage. And they got liquidated in here, then they got liquidated in there. It's all a beautiful dance of people losing money. At the moment, we have very high ask, I will say, for this trading range. It's kind of in the maximum level. People are wanting to short this resistance of 94.8 and everything below every time that they smell a pivot. And in here, this could turn into a pivot at some point if all these limit orders that are coming up in there get too high. That means that people want to unload and short. Watch out for that. This can change any minute. At the moment, looks bearish from this point of view. And liquidation levels on the shorter term are now putting the longs at higher risk with 578K. Last week, we peaked at $1.3 million on Binance USDT, and that was pretty much the bottom. We started consuming that liquidation levels up until yesterday, and as soon as we get Trump tweeting, we create a parabolic move back into the range. And you can tell that things here were rolling over, number one. Number two, there was barely 137 leftover of liquidation levels for shorts. From 1.3 million to 130,000, that is pretty much 90% of the petrol in the car gone. So there was low likelihood of continuing to the upside when the price was prior to the tweet. The tweet came right on time to give all the benefit to that trader that took the trade with 50x, because the likelihood there of the price going down was 90-something%. And he had his liquidation $50 away, and the tweet came like magic right there to push the price. And I saw the price in front of my eyes and it was moving like crazy, but never touching that liquidation level. So I will say making those profits without that tweet had a chance of succeeding of 0%. Zero. But it did. So let me know in the comments if you think that he got lucky or not, or if you think that it was an insider. I suspect strongly that it was an insider. I don't know who it was. Let's look at the order book. Let's continue with the surgery. In here, you can see that the 100K wants to be heavy at the moment. Support at 85 with 30 million, but resistance, there's plenty of levels of 40 millions all overlapping. Then we have resistance at 110. At the price of 76, we have 32 million. Let's look at this closer on Trading Light, and we can see some levels. At 72K, we have 800. So those levels of 1,000 are still surviving. For some reason, they left them there at 70K, at 69. at 72, and then they reduce as we go into 76. So the largest one from top to bottom holding the price is at 72.5. Going up, we don't see much, and in terms of resistance, we have that 95K still there with some orders. Let's look at the liquidation level. So there were 2 long liquidations on the 25th of February, on the 28th of February, and if we zoom out, we can see that they pinch around my average with that green horizontal line very frequently. Those are the liquidation levels hitting my green line, green line, green line, even the short, the longs, sometimes slightly below it, like these 3 last ones were quite big, and then the shorts getting into 540, much more than the previous 3, but combined the previous 3 are more than this single one of shorts. You can see how after entering our area of value of longs shorts delta, their ratio has broken out from this trend line pointing to the upside. So areas to watch out is obviously this area in there. If we start getting too many longs around here, that's an area of concern. I'll let you know if we get there. I'll keep it under watch during this week. Fair value gaps, well, we have consumed almost half of them. Remember, we were talking about these fat ones over the weekend. Now they are gone. We have new ones, fatter ones to the downside, which is super funny. The price moved down to 91 to test, and it has taken partially the fattest one in here that spans from 91 now into 86.2. And if it gets there, it's going to be very close to consuming fully the CME gap. To consume the CME gap on prices from Binance, you need to get to 85.1. So pretty much you need to complete the fat one at 86.388 and then jump into this skinny one at 85.1 that overlaps with the last bit of the CME gap. Below that, you get the one at 83 that spans to 81, and then the one that overlaps with the leftover of the lowest CME gap, now around 77K. Guys, remember to check my link, thetradingparrot.com/charts. There you're gonna find the answer to where are all these charts coming from. If you go to my channel on YouTube and you scroll down to the area of trading tutorials, you're gonna find this video called My Charts, Get Them All. Many of them are free, some of them are part of my community. The most valuable ones that I put a lot of work on them are part of the VIP subscription, and there are plenty of indicators as well that are third party that I use for free, and I have a partnership to give you 15% discounts. The discounts, you're gonna find them in links in the description or in the website thetradingparrot.com/charts. By the way, guys, there is an ongoing attack from scammers pretending to be me everywhere on Twitter. There's even WhatsApp groups, in YouTube comments, all over the place. As the channel becomes larger and there's more people interacting with my Telegram, my Twitter, every person that joins is getting an invite to talk to me. That's never, ever, ever me. So as soon as you get a message from me, you go, you delete, you block, you report, whatever you want to do. If you want, you can take the piss and make them suffer a little, pretend that you're gonna buy something, have fun, but never ever send anything to them. Apart from getting my charts and my Patreon subscription where you get summaries of what's going on and my actions in a time-sensitive way for $10 a month, there is literally no VIP groups with signals and stuff like that. The first thing they're gonna ask you if you can give them your coins and ridiculous things. That is always a scam. There are just 2 ways of supporting this channel, apart from hitting the like, subscribing, and writing down a comment down below. One is to join my Patreon for $10 and getting that summary and time-sensitive alerts. And the second way is to open an exchange using the links down below. Either of them are gonna help growing my team and getting better content for you. I'm currently using Binance and OKX as my main exchanges. With the link in the description for OKX, you can claim 60,000 in rewards and lower your trading fees. I also have 2 exchanges that are non-KYC. BitUnix is great because it gives you deposit and trading rewards no matter how small is your deposit. And Bluffing has great rewards, including even a Model 3 Tesla. Consider using these exchanges and you are directly supporting the channel. Thanks so much for watching. I'll see you in the next one. Bye bye. Sorry, one thing, let's do the summary. Everybody's asking for a summary of how I'm trading this. At the moment, I am looking for increasing my long exposure. I think we could have a rally into Friday. For that, 91k needs to support the price. It shouldn't break. There is high leverage at the moment from the longs. There is high risk to enter at these levels. If we pull back, I might enter in a new position, but so far I'm waiting for the general markets to open, and if anything changes, I will let you know on Telegram, Instagram, and Twitter. And of course, my Patreon members are gonna be the first ones to get that information. See you on the next one. Bye bye.